In Houston, I'm John Herder. Tuesday, 7th day of June. Great as always to have you along, everybody. In a nutshell, From the Experts is a virtual networking accelerator helping people across industries connect very quickly in a brief, moderated, interactive show format, like a TED Talk with interactive discussion. So, what's in it for you? The FTE promise: if all goes well, your curiosity spark new ideas, accelerate action, and you may have helped yourself, somebody else solve a problem, make that connection, reaching the opportunity faster. Because we know making authentic connections and expanding your networks has never been more important for your business. Thank you to our underwriters for helping transform the From the Experts vision into action. Unique Ventures, IntraPoint, Ecosystems 2030, the Canon community. Each experts in their own fields. Connect with them and learn more at fte.network. You'll be glad that you did. Welcome to FTE annual member Paul Torson, shipbroker and consultant with Bravo Group USA. Paul, great to have you on board today. Folks, help me welcome guest expert Matt Nygaard. Matt is chartered market technician and has been an independent trader since February 2022. The prior 27 years, Matt was proprietary trader for two market-making equity and index trading groups. He and his wife, also an independent trader, live in the Ravenswood neighborhood of Chicago. Hey, Matt, particularly interesting moment that we are in with the rise and volatility of cryptocurrency industry. Really grateful that you could make time to share a trader's experience and some lessons learned with the group today.
Yeah, thanks, John. Thanks for having me on today, and thank you all for taking a few minutes out of your day to talk about this subject. I'm going to go through, start on a pretty basic note and ramp up from there, just to make sure everyone in the audience has an idea of that we're kind of all on the same baseline. If you have any questions throughout, please put them on the chat or raise your hand. If there's anything I can explain a little bit better or give another example, happy to do so. Just to start as kind of a disclosure, this is just for educational purposes that we're talking, and this is not advice or a recommendation. So please, if you're considering investing into the cryptocurrency space, talk to your financial advisor before you make an investment. For those of you who have not started in cryptocurrency, there are a lot of resources. There are many exchanges. In fact, some of your regular brokerage firms have cryptocurrency arms to make it very easy for you to get into the space. I know Robinhood has cryptocurrency arm, TradeStation, things like that. But there are also many well-known exchanges that are readily available online: Coinbase, FTX, Binance US, to name a few. You can buy and sell cryptocurrencies in fractional amounts. You don't have to buy $30,000 of Bitcoin. You can buy $50 of Bitcoin or $100 of Bitcoin to get into the space. And you can set up reoccurring payments so that you can average cost in over a period of time as well. And say, if I'm going to allocate this number of financial resources monthly and disperse it over these assets, you can do that as well. So it might be something to talk to your financial advisor about. And so once you do make a purchase, you can keep the asset, the coin, on that exchange in a personal wallet, just much like your brokerage account, and you can sell it from there or move it to an off or a internet based wallet like a MetaMask or something like that. So it'll be off the exchange, or you can move it into a hard wallet, cold wallet like Ledger X, which is kind of like a thumb drive where the asset can be stored for extra security. And on those last two, please be careful with your passwords, that you keep them in a secure place, because once you lose them, there's famous stories of people having vast fortunes of cryptocurrency locked away, never to see the light of day again. So be very, very careful with that. I thought we'd start off talking a little bit about, and I'm going to use some general categories to kind of define who you are as a cryptocurrency investor or a trader. Or so one of these is called a hodler. So basically, hold on for dear life. There's someone who says, I'm going to buy Bitcoin. I don't care if it goes to zero. I don't care if it goes to million. I believe in the technology. I believe in what they're going to be trying to do, and I'm going to hold on to it through all market conditions. And then another person, maybe a gambler, someone who buys some of these meme coins, Dogecoin and SHIB, and some of these that you may have read around in the Financial Times or the financial newspapers that make these tremendous moves day in, day out, and incredible crashes. It's kind of beyond what I do, but some people are excited to be in that kind of space. Then you have a researcher, someone who does a lot of independent investigation and research, reads white papers, looks up on a member of podcasts and various newsletters to get the real ins and outs behind what's going on in the technology, and hopefully become an early adopter into some of these coins that go on to make tremendous moves. It takes a lot of time and diligence and research, but if that's something you're drawn to, you can do very well with it. A couple of newsletters that I use, which I enjoy, are Milk Road and one called Not Boring, and they cover a lot of really interesting subjects on blockchain and some of the cryptocurrency investments. So those are a couple just to take a look at. And I'm going to concentrate more today on another role, which I consider myself in the space as a trader, for someone who owns coins in favorable uptrending markets only. Now, in a caveat with these 4 descriptions, I would say that I fall into a couple of them. So I don't think you can be exclusively in any of those. I'm definitely a hodler in a few coins, which I feel that I'm just not good enough to time the top or bottom. I want to be involved long term, so that's fine. But in most other cases, I'm a trader. There are times where I'm more of a gambler than I should be, and as long as you realize that about yourself and allocate a small portion of your cryptocurrency assets towards that, knowing that you could lose it all or that's how it's going to be, then that's probably okay too. So why don't we pull up the first slide, Gus?
Hey, Matt.
Yeah.
Just do you want to take a look at where the group is? We've
Sure.
just posted a poll, and it looks like about half own cryptocurrency. About half have heard what's happened with Luna. Biggest concerns when about cryptocurrency, about 22%. It's just getting started. About 11%, it's just too darn hard to understand without an expert. Too volatile, about another 22%. 11% think this might be a scam, and well, we'll have to wait for the group discussion for about a third of the folks because they've got other ideas. Okay. But half the folks believe, yeah, it is important to actually own cryptocurrency in their portfolio. So that's an update from the first poll.
Right, and taking a quick step back on that, I think when you talk to your financial advisor about how much of your financial assets you'd allocate towards cryptocurrency, you probably get a pretty wide range of suggestions. I would guess a lot of financial experts would say that you would consider it kind of like exposure in gold or precious metals or commodity space that allows you some diversification. I know personally for me, my range depends on what kind of market we're in. For in a good uptrending market, I'm much heavier into cryptocurrency. It's a larger percentage of my portfolio. In the current environment, it's a very small percentage, probably the smallest it's been in years. And so I think that kind of changes, just as it does in any of your equity investments in the financial markets as well. It's kind of a function of the current environment, and I think that's one of the main takeaways. Hopefully, you'll get from me today is using a couple tools for you to get a sense of what kind of market we're in and what would have to change for me to say, boy, I'm feeling pretty good about things. I want to start allocating more money into it. And so hopefully you all will get some information and a couple tools, simple to use tools for that. And if you have any questions about that, we can talk about it more. But let's look at the first slide. So these are 3 assets The top or on the far left is Bitcoin. So that's a Bitcoin chart. It's a daily chart going back to early part of this year in 2022. The next chart is Tesla, and I think most of us can look at this chart and say, boy, these two are kind of moving pretty closely together, which is interesting. And then the third over to the right is the triple Q, the NASDAQ ETF. One thing I wanted to talk about as far as volatility goes, there are a couple of ways to measure volatility, or two ways that I use. One of them is what's called historic volatility, and that is the second graph below each of the main price charts. And so it's labeled HV. So you can see under Bitcoin, basically historic volatility is a statistical measurement of price distribution or return distribution around a mean over a defined period of time. So our historic volatility, and a lot of people use historic volatility in asset pricing. So as a comparison to implied volatility in options, which I tend to trade quite a bit, so that you can say my options are priced at 90 volatility and the actual movement of the asset is 70 volatility. They might be a little expensive, or they might be a little cheap relative to what the most recent price activity is. But for our purposes, I wanted to show, kind of demystify or demythify a couple of things about cryptocurrency. You can see with Bitcoin and Tesla, their historic volatility is very, very similar. In fact, in the last 6 months or so, Tesla and Bitcoin have moved in a very similar distribution around their mean. So they're equally volatile. Whereas if you look over to triple Q, the NASDAQ, it's about 50% as volatile. And so what some investment managers may do, or they may recommend to you, or something you consider on your own, is that you can adjust your volatility exposure by taking a volatility weighted percentage of that asset. Say if your base investment is triple Q or the NASDAQ, I would only allocate 50% or less into Tesla or Bitcoin, because they're twice as volatile. If you wanted to normalize your range of returns. But going back to the volatility portion of it, is that I think there's a stigma of cryptocurrency being incredibly volatile, and which it is, but some of the most widely followed financial assets are also as volatile, if not as more volatile. And so I just wanted to put that out there as a way for you to kind of measure how volatile an asset is. The bottom ticker is what's called an average true range. And what that is the over a time period, and the standard is 14 days. Over the last 14 days, the low to the high range in Bitcoin, as you can see on the chart, is around $1,600. So every day for the last 14 days on average, the range from the low to the high is about $1,600, and that is about 5.5% of the current underlying price. And so you can take some of these and normalize them based on the underlying price. If you look at Tesla, for the last 14 days, it moves an average of $40 from its low to high on a daily basis over the last, over the last 14 days. As a percentage of the underlying asset, it's also 5.5%. So not only on a historic volatility basis, but on a average price range basis, Bitcoin and Tesla are moving in a very similar way. And then if you look at triple Q on the furthest right, that's down to just about 10%, or at 10 points on a daily basis, and that's about 3%. So as we saw with historic volatility, it's around 50% of the other two assets. And so these tools are available on many charting platforms, just to give you an idea of how volatile that the underlying assets are acting. You may say, boy, this is moving too much to me. I'm going to wait for a lower volatility environment, which usually happens when assets are slowly increasing in price. A higher price tends to be a more stable environment in a lot of investors' eyes, and volatility may be decreasing. That's when I'm more comfortable being involved in the market. And so anyway, this is just a tool for you to use to know the volatility of the assets you're investing in, and to identify higher or lower environments to enter the market. Now, from this chart, one other thing you can do is say a way to further reduce volatility is to reduce your exposure in the marketplace in general. So as a trader, if I'm going to be involved in cryptocurrency, let's say in Bitcoin, only when the environment is favorable for me to do so, if I feel that there's a defined trend, uptrend, stabilized pricing, I have a defined exit point where I think the trend is over. I think that I'm taking my time out of the market that I'm involved in. That also can reduce your volatility. You're not going to be involved. You may miss some of the big shocks, the big price shocks up and down. But that's just one way as a trader you can reduce your volatility as well. Can we move to the next slide? Thank you. So I'm going to give you a quick crash course in some technical analysis ideas and tools. A lot of these are available on the charting platforms. One of them I use is called TradingView, and it's a pretty reasonably priced platform. Most of the cryptocurrency exchanges have free charting with them, and you can add some of these overlay tools on it. So here is a daily chart again of Bitcoin. I've added a few overlay tools on this chart. The bright yellow trend line is a exponential moving average. It's a 21 period exponential moving average. The lighter blue line above that is an 8 period exponential moving average, so a shorter time period. And generally what I try to do is I want to be in Bitcoin when the shorter moving average is trending higher above a longer period moving average. And so in very simple terms, the nine period exponential moving average is the weighted price over the last 9 periods. Exponential adds more weight to the most recent time period, so it moves a little faster. But you'll see that at the first circle there on the left, the yellow, you can see that there's a crossover. The blue moving average, the shorter moving average, crossed back above the longer yellow moving average. The trend line is pretty easy to visually recognize that it's trending higher. And it's moved higher until the next yellow circle there, where it crossed back below the moving average, and the shorter moving average crossed below the longer moving average. So at that point, my premise for an uptrend based on moving average is over. That uptrend is over, and I would exit my position in Bitcoin. One other thing you can see as a characteristic of this movement from these between these two yellow circles is that you have a series of what we call a higher high and higher low. So we had the rally from the yellow circle there up to the top of the blue band. Then it retraced back to the yellow moving average again. So it made a low, but it was a higher low than before we entered into that crossover. It rallied back up again, had a pullback, so it made a new high, had a pullback to the moving average, which was higher than the previous low. So you're having a series of higher highs and higher lows, which is also a way to define an uptrend. And then finally, when you do have the moving average cross at the yellow circle, Bitcoin does break down below the prior low. And so the higher high, higher low trend is also over, and the moving average cross happens. And so that's a time where I say, okay, this trend is over. I'm going to wait for a new uptrend to begin.
Hey, Matt.
Yep.
We, as you're kind of putting together your last comments, thought I'd throw in a couple of questions that we've had here. Dr. Danino says, has anybody modeled fluctuations in crypto? And if so, what are the principal determinants? Any take on that?
I don't have a take on that. I'm sure there are studies for historic volatility dispersion, and if they correlate, I know some of the larger cryptocurrencies tend to move together, and so that correlation, there are studies for it. I don't. It's beyond my purview, but I'm sure these are readily available.
Okay, super. And then Paul had asked about, hey, the transaction costs seem pretty darn high, at least in Coinbase. Will these be coming down anytime soon? What's your feeling on that?
Yeah, as there's more and more competition, obviously the prices will come down. I agree. In some cases, they are pretty high, and it pays to shop around because it varies by exchange. And I'm not sure off the top of my head where some of the brokerage firms, I know, for example, Robinhood has zero fees for equity trading. If they're also very competitive on cryptocurrency fees, but there is a range, and it definitely, if you're an active trader, it's worth checking out to find your best deal. And if you become as you are more active, a lot of these fees automatically come down within the exchange. They measure your activity and reduce your commissions accordingly.
Got it. Any last thoughts back to your talk and that you'd like to share with the group?
I'm sorry, what was that, John?
Yeah, I'm just, I finished with those questions that came up. Go ahead, and if you could kindly share your last few thoughts
Sure.
in your.
Yep. So that, and you can see in the green circle there, it's a very similar idea as we were just talking about, higher highs, higher lows, moving average crossover. And then once you get to the second, the green line, you can see we're in a protracted downtrend. There was never a time where the moving averages crossed back over. We make consistent lower lows and lower highs, and we get down to in not too far from where we're currently trading. Before we jumped on, someone was talking about, we were talking a little bit about the current state of the cryptocurrency market, and I tend to use Bitcoin as a good bellwether for that. You can see since basically February to beginning of May, it was in a pretty sideways range, as defined by those support and resistance lines I drew in. We made an attempt to break out in early April, and then it fell back into a pretty easy to find channel there with the two yellow parallel lines, downtrend line. And then in early May, it really fell off, and that correlates with the demise of the Luna stablecoin, where people were very concerned about what was going on in the cryptocurrency space, and Bitcoin fell very quickly down to about 25,500. We've bounced off of there and have actually been in a really tight range, with some pretty big swings, daily swings. I know the last couple of days we've had 5% overnight swings up and down. But as you would note, that we have made a very shallow higher high, higher low progression so far, from the low of 25,500. And the moving averages, you can see, are kind of converging. And so that tends to happen when you get into a sideways range like this. I think what we'll want to see is a new high taking in cryptocurrency, or I'm sorry, Bitcoin, going back over roughly 33,000, which is near the recent high, and stabilized trade above there. Once that happens, then I think Bitcoin may be comfortably back into that 33,000 to $45,000 range, and then we'll look for further stabilization, improvement in the price action, that with a series of higher highs, higher lows, crossover in the moving averages into an uptrend. And then I wish I would have continued to draw this trend line. This yellow channel that's heading down from that poke out over 46,000. If you extend that trend line, that probably comes pretty close to 33,000 as well. So I think that will be a good test, not only getting back into the range, but above the pretty steep downtrend we had from early April. And so that, if we're using Bitcoin as kind of the bellwether of how things are going in the cryptocurrency space, I think the things I'm going to be looking for is an improvement in the technical analysis, or the technical parts of it, in a series of higher highs and higher lows, looking for trade back over 33,000. I'm looking for moving averages to cross back positive, and ideally, we get a rally up to the top of the resistance up to 46,000, and I think that will be the big test of how strong any kind of rally is. So let's jump over to the last slide, and I'll.
We got about 1 to 2 minutes.
Okay, I'll go quickly here. So this is a chart of Luna, the stablecoin Luna. The reason I bring this up is, there are a lot of people that lost a lot of money in this as a quote unquote stablecoin. And honestly, I was trading this asset and didn't even know it was a stablecoin. I just knew the price was, had some nice uptrends, and so I was going with that. It did reverse very quickly in early April, back below the prior high of around 103, and the moving averages crossed. So if you were an active person in this asset, you'd say, "Oh boy, this uptrend is over. I'm getting out and going on the sidelines." Well, if you didn't follow that advice, you probably would have paid attention to the support around 78, which was the prior high in December of 2021. It tested it in mid-April and then fell to it again and through it in early May. That would have been a good time to get out as well. And it's clearly in a downtrend with the moving averages severely lower. So, well, okay, I didn't follow that. Let's go with the trend line from the low from mid-October, which is around 56,000. Okay, well, that would have been another time to get out. Okay, how about the low from early February? And honestly, that's when I got out. So I wrote it down all the way from 100 to 43, and I said, if it goes through this low here, I'm out. I've given up. There's no chance. And so I got out that evening at 41,000 or something to that effect. And within 2 days, it was close to zero. And so pretty much anything can happen. And one of the things that John had passed along to you is that there are 33,000 crypto coins in the space. And we're going into a very difficult time period, and most of them will not make it. And so you have to have kind of a plan for when you think the trend is over, or when you don't want to be involved anymore, and have a plan to stick to it. And you can, even though you take some losses, it's not a cataclysmic loss like a lot of people experienced in Luna. So
basically what you're saying is Bitcoin is still the gold standard here?
Yeah, it's still the largest market cap for sure. It's the most widely owned, most institutionally owned. So I think that space is kind of defined by Bitcoin. But if you move on to the other top 10, I think it's good just to go through the list and just pull up some charts once a week or once a month and kind of get a sense on where the space is, and then you have a better idea of where you are as far as making investment.
Sounds great. Well, Max, shall we go ahead and open the floor and
Sure.
get feedback from the group? Folks, feel free to ask your questions, continuing that in the chat, or voice them now. The group discussion question we put out there to kind of get us all started is, well, what is your take based on what you know and what you just heard on the cryptocurrency market, and what would have to change for you to invest again?
Mhm.
So anybody, please feel free to speak up. I'd love to hear from, we've got half people that are already invested, and then of course half are not, but probably have lots of questions.
Yeah.
Liz, or who is?
I can open up with a question.
Yeah.
When you look at the charts and you step back, when I look at Bitcoin, there looks like there's a shelf and it's a long way down to the next support level. The only thing that kind of, for me, fights that is some of the basics of the Bitcoin mining, which I understood was, for a while there, they said it was costing about $40,000 per Bitcoin to mine. And is that Bitcoin price, is that coming off or is it going up? I know that it's designed to go up, but of course efficiency gains can fight that increase in cost, and I know they're trying to reduce the energy cost anyway. So I don't know what your take is on that.
Yeah, it's interesting. It's not something I really follow too much, but as price comes down and the difference between mining and the realized price becomes more attractive, you're going to get more people in the space. I can't speak intelligently about that difference. I know that's been a real knock on the space as far as it's not a very green technology as far as mining, and someone who does develop a way to do that more efficiently is probably going to get an edge. So yeah, it's all there. There's so many ways to look at these spaces, and as you become an expert or get more knowledge about it, obviously you get an edge. So yeah, I continue to monitor that.
And maybe I can provide some insight on this because I am a Bitcoin miner. I have a company in Texas, and we host my Bitcoin miners. And there's a lot of things that go into the price of Bitcoin mining going up and down. One of them is the difficulty, which has been going up. The other is the cost of the equipment. And I don't know if anybody knows this, but it's basically one company in the world that creates Bitcoin miners, and they control everything. They have the monopoly on it. So they decide when new equipment comes out. I mean, there's a lot of things. I can go on and on about this topic, and I know this is not the topic of the call, but if anybody is interested in learning more about mining, I can definitely hop on a call. But I don't, and to answer your question, I don't think mining has anything to do with the price of, maybe a little, but it doesn't have much to do with the price of Bitcoin. And I don't know if that answers your question at all.
Absolutely, that's interesting to hear. That perspective about that. Because I think of it kind of like the price of oil versus drilling. When price of oil drops, people stop drilling, and when it's up, they start drilling. So I was kind of thinking it had a similar effect. So eventually, if it dropped, mining would be reduced and would naturally escalate and come back up. But
no. The only thing that controls it's the protocol and the code itself that controls the difficulty of Bitcoin mining.
Right, yeah.
Sounds like you two need to connect after the show.
Absolutely, thank you. Yeah.
Happy to.
So Sergey also brings up in his comments, he says, as crypto exchanges in the USA don't allow short selling, what would be the best instrument for shorting crypto?
A great question. It's a good point you bring up. I think it's on a state by state basis where I know there are people in the US that have exchanges that allow it. You can do some searches to find that out. Whether, for me personally, I'm not interested in it unless it's widely accepted and government approved, because it's just not a fight that I'm interested in getting the call from the IRS or the SEC. Yeah, I think I guess one way you can do it is to trade the Bitcoins on the CME. You can trade the futures electronically as a short, and they have E-mini and micro Bitcoin and Ethereum futures. And so for for a smaller contract size, you can take a short position and at least hedge your current long position that you have in actual coin. So that could be something to consider.
And I can also add, gate.io is a great platform too. And I think that would be a good place to start. It's really good. It does everything, literally everything. Yeah, I'm not sure how it works in the States. I'm in Israel, so I'm not entirely sure which states allow it, but it's a good place to start.
Thanks, Liz. We'll add that to the post show notes. Anybody else want to share their take on the crypto market as they see it and what would need to change to invest again? Denise, what's your take on this? Or Anshul, I know it's really late in India, but I know you're working in this space. If you've got any comments, or anybody.
Yeah, well, I'm an ex-Wall Street professional, Matt. I've worked at Goldman and Morgan Stanley for about 28 years. So familiar with a lot of the terms. Also ran a risk management business at Goldman, so familiar with the risk management side of things. I actually called the bottom of Bitcoin at 3,000. And I told my husband, we got to invest now. And of course, we didn't have any cash to invest. So he didn't. So I can still kicking him for that. I'm kicking him, notice how I said that. But I'm very interested in it. I don't think it's going away. I think that there's lots of opportunity. I mean, I am interested in Sergey's question about shorting and about hedging instruments. As soon as I have some cash, I will be investing, and I'm just not sure if I'm going to invest in a basket or, I mean, I guess my question for you is, do you see them all as correlated, or do you see any that are sort of uncorrelated and could be used as a modified hedge?
That's a good question. I think a lot of them are very correlated. We're kind of in a period now where you see a term that's thrown out a lot is called a crypto winter or an altcoin winter. And the concern is that you have this big drawdown, and not only do the prices not rebound, but you have diminishing investment into the space and diminished technology advance in the space. And so if you can monitor, and in one of the post-show notes, there's a couple websites for people that are kind of fundamentally inclined, that like to look at the actual price revenue and things like that. There are a couple websites that show the revenue of the coins as far as and so you can kind of build your own PE ratio for the various coins based on price and the revenue, and then you can monitor that over time. And so there are some coins that are generating revenue and say, well, they probably have a better chance of riding this out, and that would be the place to start if that's your interest. So there are some like that.
That's very interesting. The other little angle here is that we run a technology platform for online communities. That's our business. Mm-hmm. And a lot of our clients really want, and we have a coin technology, an activity coin technology built into the platform. It's just loyalty coins right now, but for tracking activity. But a lot of our clients want us to apply a token to it. So we're looking at a few options for creating sort of public blockchain as a service style tokens. And so this is all interesting for me too, because it's like, how do you keep a token alive? There's been a lot of failed experiments for community tokens. So
interesting.
Sorry, I run, I don't run, but I'm part of a community, a DAO here in Israel.
Yeah.
And what we do is we connect people. You come to us with something that you need in the space, and we'll help you find whoever you need. So we can find you an expert in tokenomics that can help you build whatever you want to build for your platform.
Okay. Should I connect with you on LinkedIn, Liz? Or
yes.
Okay.
That sounds great. And by the way, that's the last from the group, but everybody will receive everybody's contact info here in the post show notes. So thank you very much, Denise and Liz. And so Matt, any last words, last takeaway before we close this down?
I think there are a lot of resources out there, and they'll be in the post notes. If you want to learn more about technical analysis, some of the things that I brought up, there's some really good resources. The CMT Association has all kinds of stockcharts.com has all kinds of videos and things like that. The two places to get revenue numbers from coins, will be also listed on there. I would suggest you check those out if that's something you're interested in. Also, the coin market cap is a great spot to get the total market cap for all the coins and which exchanges they trade on. I think that's a good starting point to narrow your search. So.
In 30 seconds or less, for people who haven't started, recommendation on how to get started in cryptocurrency.
I would start with a larger coin, start with a well-known exchange or your current brokerage firm, start with a small amount and, chart it and monitor it. And as you get more comfortable, you can expand from there.
Awesome. Last word. Thanks, Matt. So folks, how was the talk and discussion today? Please take the 30-second FTE survey that's being dropped right now. Let us know how we're doing, how we can get better. You or somebody, a thought leader who wants to test drive their current challenge, get some new ideas and help others connect and learn faster. Our call for experts is always open. And so is our invitation for members, partners, and underwriters to be a part of transforming and accelerating the FTE vision and community for good business. Want to learn more? Just let us know on the survey. And we're growing fast because of you. Please keep sharing FTE, invite other leaders that you want to network with, and check out our on-demand library of experts and content available in podcast and video. In the coming months, FTE will help you connect and learn with experts and leaders around themes like future of technologies, future of work, energy transition, inclusion, sustainability, clean economy, national security versus national prosperity, and more like that. So stay tuned. Folks, we're out of time. Thanks once again, Matt, and to all of you for making time to connect and learn on From the Experts. You guys have a great rest of your day, wherever you are. Bye.